All right, guys, it's Angelo Christian with another great edition of Real Estate Insider. Today, we have a very special guest in the house. She's here to teach us about reverse mortgage. She's a master and expert, probably done a ton of reverse mortgages in your career, and I want you to teach us all today about reverse mortgage. That's why we're here today, to talk about them. And you know, I know you guys are out there. You're wondering what's a reverse mortgage. You've had a lot of questions. There's a lot of healthy skepticism. There's a lot of political debate about it. And today we're going to handle all those qualms, all those questions that you guys have, to talk about reverse mortgage and actually educate you and show you the benefits, the reasons, the pros and the cons of a reverse mortgage, and actually explain the differences. So, you know, thank you so much for coming in today. Very nice to meet you. And
nice to meet
you know,
you too.
I'm thrilled and delighted. I've heard, you know, wonderful things about you as far as your background, your career, about reverse mortgage. And I used to do a lot of reverse mortgage several years ago. It was actually all I used to do back in 2010, 2011. Wow. And I got out of it after there was a lot of political stuff. There was a huge class action. Yes. And then I focused mainly on purchase. And now our company is now back heavy focused on helping seniors with reverse mortgage, either HECM purchases or the refi, and even also going after helping some of the jumbo clients too. And I really want to know, like, you know, as far as I want you to educate us today. That's the goal for today, to educate our followers about reverse mortgage, why somebody should even consider it, why maybe it's not for everybody. I don't know.
It's definitely not for everybody. But there's such a wide array of reasons to take a reverse mortgage, and how things are evolving now, where it used to be a tool for last resort, you know, to save your house or whatever. Now we're getting the more affluent borrowers, where their house is paid off fully, and they just want to use it as an investment tool. Because that line of credit, when your money is in that line of credit, interest does not accrue against it. And you can borrow from it over and over, or you can just leave it to grow anywhere between 4.5% and 6%, which is pretty healthy compared to a savings account of what, 1/3% if you're lucky.
Okay, so let's talk about it, because that's a huge thing that you just mentioned. So what you're talking about is on the if they're going with a LIBOR, like a HECM line, credit line growth rate, that if a borrower is doing that product, that their actual principal balance of the credit line will actually grow on the untapped portion, right? Okay. So,
and they can borrow from that. They are in the driver's seat, whereas they can borrow and pay back. Whatever you borrow, interest accrues against that. If you take $10,000 out, interest will accrue against that. If you pay it back.
But the amount that they don't take is actually growing. So and so, guys, one thing you got to think about, what type of mortgage instrument would do that? Nothing else in the marketplace.
Well, it gets put up against a HELOC all the time. And the main differences is the growth rate of the line of credit. That's beautiful. If you want to pay back, you can, but on a HELOC, you will pay back, or you mess up your credit, you lose it, they can take it from you at any time. Whereas the HECM, which is a reverse mortgage, it's FHA insured, and nobody can take it from you.
So I guess that's another big thing that that I get calls all the time from seniors, that I'm not going to sell my house to you at 50 cents on the dollar. You're not taking my property.
No.
So what's the deal?
Well, that's probably back from before, like 2008 and 9, where you'd hear stories. They just don't understand. We do not purchase your house. You always are untitled. It's just like a forward mortgage. We do have a lien against your house. But we don't own it. If you can imagine, we would have millions of houses. We would have to, have all this staff taking care of these houses. We don't take your house.
Okay, so let's back up a little bit. So what is a reverse mortgage? What is it?
Home equity conversion mortgage. What we do is we grant a portion of what your home is worth based on your age and home value, and the unborrowed equity is yours. There's always that unborrowed equity. People forget about that. They think we're buying their house for half the price. We're not buying it, but we're just giving them a portion. So they always have that extra equity to leave to their kids, because that's really a big thing with people. They want to leave something for their kids. So you've got that cushion. You always have to be aware that you have to pay your property taxes, your homeowner's insurance, and the upkeep of the house is a big deal.
Right.
And that's pretty
well. But let me ask this: so, as far as why would somebody? I know you mentioned for investment ideas. Why? I'm just out of curiosity. Why is the reverse mortgage here? Why is it here? Is it?
Well, it does help people who do really need it to age in place. They want to stay in their home, age in place, and you can stay until you either sell the house and move in with the kids, or you. I'm looking at my son as I say that, or go live on a cruise ship, or just get an apartment, or you can leave foot first until you pass away. When you pass away, it's just like a forward mortgage. You can will it to your kids, or your cat, or your church, whoever you want.
Right.
They have up to a year.
Up to a year.
To either pay the mortgage off and keep the house, or they can sell the property, pay the mortgage off, and keep the proceeds.
Okay. So basically the idea behind it, or the strategy, is that a senior is, living out the best years, the remainder of their life.
Yeah.
And basically in that idea is to relinquish them from that mortgage obligation.
Right. Yes. And the thing is, there's a lot of people too. There's people that have no mortgage, but one of them passes. Immediately, their income cuts in half.
Right.
And yes, the surviving spouse gets the higher of the two when you're talking just Social Security. But sometimes that makes it still very tough.
Right.
So this is nice to have the extra income, the security, the nest egg. And, when you get older, things change.
Right.
You might need that walk-in bathtub. You might need that ramp for your wheelchair.
Exactly. Where
are you going to get that money?
Right. And it's interesting you bring that up. It said that when somebody actually retires, that 23% of their income is going to go towards medical and Medicaid.
Oh, yeah. Yep.
And that, I guess, by the year 2030, there's going to be another 50 million baby boomers that are going to be retiring.
Well, right now there's like 10,000.
10,000 a day, right? Is it 10,000 a day that are
retiring?
Yeah. So, I mean, when you think about those numbers, it's staggering.
It is staggering. And the thing is, it used to be where you would talk to a financial investor or financial advisor, and the first thing is no reverse mortgage. Now the world is turning,
right?
And they're seeing
the benefit. Yeah, they're seeing the value.
Benefits.
Yeah. Now, so some of the other, as far as the other requirements and with a reverse mortgage, how old do you have to be to get a reverse mortgage?
In all states but Texas, at least one spouse must be 62 years or older. If your wife is under or your husband is under, that's fine. In Texas, both spouses must be 62.
Okay. So let's talk on that, because like when I did reverse mortgages, and a lot of the stigma in the industry was if one of the spouses was below 62, the non-borrowing spouse, she couldn't go on title.
She'd come off title.
Off title, and then the onus would be on her if the other spouse passed.
Right.
Then caused a lot of issues. So how is it changed now? Because I want to understand that a little bit better.
The spouse no longer has to come off title.
Oh, really?
Yes.
Okay.
So she or he could be a non-borrowing spouse.
Okay.
And
then she's protected.
She's protected.
Okay.
Yeah.
So now what happens if the borrowing spouse passes?
Then she doesn't have to do anything.
She doesn't have to do anything.
She'll have to file. I mean, they're going to know he's passed, or she, but she's not really going to have to do anything. If she wants to get back on title, she can. It's going to come to her if he's got.
Right. Yeah. I got you. Now you said there was a caveat. You said, but Texas. So what?
Well, honestly, if she's come off title and she's an eligible non-borrowing spouse, she would have 3 months to get back on title. Okay. She'd have to pay off the mortgage
or sell.
Okay. Yeah.
That's okay. So I just want to make sure I understand. So can they close on could someone in Texas do a reverse with a spouse sub 62?
Wait a minute, you got me there. Hold on. No,
No,
you
they
can't do it. You can't even be an unborrowing spouse in Texas. Thank you.
Yeah, yeah.
Texas, you must both be 62. Period.
So you can't do
No.
the deal.
No.
So okay, so then that way, so both spouses would have to be 62.
Yes, Texas only. I foresee that changing, but Texas
Okay.
is
Okay. So okay, and so basically, but in any other state, if one of them is sub 62,
right,
and one of the spouses passes away, then
she's protected.
She's
and can
protected.
Stay in
Okay.
that house for the rest of her
That's
life.
good. That's very good.
It is good.
So guys, if you're out there and one of your spouses is below 62 years old, you can still get a reverse mortgage.
Yes.
The law has changed to protect you as the homeowner, that your wife or your husband, if they're below 62, you'll still be protected, and keep title to the property. Or I guess the other thing is that, and if you did a HECM refi, couldn't they also add other?
You can have, if you have children living in the house, they would also be counseled and such. But no, you wouldn't want your kids on title.
Yeah. No, but let's say that later on that, for example, that you have, so could you ever do a HECM refi, and then if someone you had another family member that turned 62 and add them to the loan?
No.
Oh, you cannot do that.
No.
Okay.
That would be awfully expensive.
Okay. It'd be expensive
You
to do.
can put your wife on. You can.
Okay.
But the way it is now, NORMLA's rules are that you have to benefit 5 times. You have to have a 5 times net benefit.
Right.
In order.
Right.
And that's really hard to do anymore because of how things have changed.
Well, I guess there's a cost benefit, right, calculation.
Yes.
And then there's I think a principal limit increase benefit, some type of other calculation.
In a lot of cases, it's just not worth it.
Yeah.
You can, but
you're talking about doing for a reverse mortgage to a reverse mortgage refi.
yes.
Okay, not a regular refinance, or not if you had a regular mortgage and you wanted to refinance into a HECM.
Yeah, then you can do that.
Yeah. So that's totally beneficial.
Mhm.
So as far as the some of the other changes that have come up with a reverse mortgage, I know that there's a financial assessment now.
Yes.
So how does the financial
That's
assessment?
actually, everybody was so nervous about that, but it's been a brilliant thing. It saved a lot of people from doing it and not really being able to afford it. We just make sure that you have enough money after you've paid your taxes and your insurance, that you have enough money to eat. I mean,
yeah.
prior to financial assessment, which was 2-3 years ago, if you could fog a mirror with one nostril, you qualified.
Okay.
Now we do make sure. Now we have no foreclosures.
Right.
For
So
non-payment of taxes and that.
All right. So the financial assessment is basically your income minus your credit report obligations,
Right.
minus your taxes and insurance.
Yep.
And you have to have a certain amount left over every month.
It depends on what part of the country you're
Right.
from. It's a little different. Exactly.
Right. It's based on the VA residual income calculation.
Exactly.
Yeah. So, and it's not that much actually, guys. No. I mean, what is it, like $500 to $1,500 a month,
right.
something like that?
And the thing is, if you're short, we can do. Oh my goodness,
Lisa.
No. Yes, you can.
Right.
Now, Lisa's another subject. That's a brilliant.
Yeah, I want to
really.
ask you about that. Yeah.
Yeah. But we can do a theoretical dissipation of the proceeds. Like if you only have $400 left after you have paid your taxes, insurance, and your 14 cents per square foot, then we can take, if you're going to have, let's say, $60,000 in your line of credit, we can do a theoretical dissipation.
Okay.
And that will add, like we divide that amount by the number of months you're going to be alive. Your expected, your life expectancy. And then that will add to your monthly income.
Oh, really?
Yeah.
Wow,
So
I did not read that, huh?
Yes.
Wow,
So
that's good. That's good. Yeah.
that does help a lot of people.
Yeah.
Yeah.
Okay. Are you seeing that most people that apply for a reverse mortgage, do most of them pass the financial assessment?
Yes.
Okay.
Yes.
Okay.
And like I said, that theoretical dissipation really does help.
Yeah.
Yeah.
That's strong. I did not know about that. That
Yeah.
is strong. You can
It
add that
is.
back in. Now I know we brought up the word Lisa, and not Lisa is someone's name.
No.
But what does Lisa mean?
That is a life expectancy set aside.
Okay.
And that's basically.
Sounds like a mouthful.
Yes. That's why we say Lisa. So that is, in most cases, you can request one. Like I've had, little old ladies that don't drive, and so we take care of their taxes and insurance. It's an escrow.
It's an escrow account. Okay.
Right.
Okay. Gotcha.
Now, if you've had any lates within the last 2 years on mortgage or homeowners insurance or home association dues in the last 2 years, then there's a forced placed escrow. Gotcha. So if we need to do a theoretical dissipation, we take the money, because we keep that in your line of credit. Right. Okay. So we deduct all that. Whatever's left, we can dissipate that. Okay. But if your Lisa takes all of that and you're still short, a Lisa will save you in some cases. Right. Yeah. But that's another, I think, a great tool. Yeah. Because I think prior to that change, you saw a lot of seniors that were threatening foreclosure because of the property taxes. Yes. Or they didn't have their insurance on. Right. They got the house caught on fire or something like that. Right. And so now, with that being managed, now, but that doesn't mean that a reverse mortgage that they're required to have a Lisa, right? No. They're not required. I have a lot of people that request it. The only time it's forced placed is if you've had lates within the last 2 years in tax, insurance, or homeowners association dues. Okay. But now, so if you've been delayed on those, then you have to have a Lisa. Okay, I did not know that. Within the last 2 years. Last 2 years, yeah. Yeah, okay, that's a big point too. Yeah. We don't go by credit scores. We go That's the other thing I was going to ask you. Credit character. Okay. So what's the difference in that? The difference is we don't go by credit scores. You get better rates on fees if you have great credit, like over 660 or something like that. But, but if you've had issues, we can work around them. There's all different kinds of ways to look at credit, and we work with people. So if somebody, let's say someone had a 550 credit, they wouldn't be denied for... No, not at all. Okay. A lot of times when people have those issues, they've had health issues. Right. And their credit score tanks. But there's extenuating circumstances. Right. So if you can back up your extenuating circumstance, health issue, with hospital bills, doctor, a letter explaining what happened. Right. Because it happens to a lot of people. For sure. Especially if one spouse dies and then the other one becomes ill. Things happen. Okay. So, right. We're not monsters. No. I mean, that's I think it's very flexible. Yeah, I think that's one of the compelling things that I've always been attracted on a reverse mortgage is that, if you have a conventional loan and you get delinquent on your house payment, they'll foreclose on your house. Yes. But you don't have that because let's face it, guys, we don't know what's going to happen in the future. No. I don't know. You don't know what's going to happen. Right. So if I take on this obligation, whether I'm in reverse mortgage, you can also buy a house with a reverse mortgage, right? That's brilliant. Yeah, and so, I mean, to me, if I'm 65, 70 years old, I don't want to have a house payment for what? What's the reason? What's the point? Exactly. There's no reason. I mean, so if you just stop and think about it, I don't have I remember one time, the only time I ever told someone that it didn't make sense to do a reverse mortgage. This lady was a customer of mine. She had a historical home in San Antonio that was right by the Alamo, and it was like built in 1802 or whatever, and it was trademarked as a historical home and worth a lot of money, and it had to stay in the family. And I said, well, maybe you don't want to consider doing a reverse mortgage, but other than that, if you don't have some type of specialty type property, I'm a huge advocate of it. Because it really, I have a story for you. There was a client of mine, and I don't know if you've ever had to do this with a reverse mortgage, but she was 78 years old, and she had to take care. Her daughter passed away, and the daughter had 4 children, and that she took custody of the children, and she got behind on her mortgage with Wells Fargo. Wells Fargo foreclosed on her. And she called me and was crying on the phone asking if there's anything I can do for her. She owed $30,000 on the home, was worth like $180,000. And this was back in like 2009. Yeah.
And so I immediately thought reverse mortgage.
Yeah.
I had to call the attorney for Wells Fargo and beg him to undo this foreclosure and put it back in her name.
Yeah.
And he did. And we closed on that deal and got her the cash. And it was just the greatest story ever, because she had these little kids there and they were going to kick her out of her house.
Yeah.
But thank God for because the thing, the point I'm trying to make is thank God for a reverse mortgage.
Oh gosh, it's been a godsend for so many people.
Yeah.
It's amazing.
Yeah.
Yeah.
So it was a really amazing, because you think that she called about a refinance. It's like, ma'am, you can't have a refinance. You're not going to qualify because it's credit based, right? Reverse mortgage. Like you said, you don't have to have a 600, 700 credit score. We can help you if you don't have that.
Yeah.
And so that to me was, and I've also helped astute attorneys, that owned $1 million homes, and they said, hey, I want this cash out, I'm going to invest it.
Yeah.
So like you said.
That brings us to the proprietary loans that are jumbos from almost everybody's doing their own proprietary loans now, jumbo loans.
Okay. Is it the Home Safe?
Well,
is that
that's
one
is that company.
Okay.
But everybody has their own name. But yeah, basically.
It's a jumbo. So how does it work with the jumbo reverse mortgage?
Well, you take all your cash.
It's a lump sum.
A lump sum.
Okay.
And there's no line of credit.
Okay.
There's also a huge difference in closing costs. Whereas if you have, a $1 million home and you're getting a regular reverse mortgage, FHA's cap is $679,650.
Okay.
And then we take that amount based on your age. You get a portion of that. With all these proprietary jumbos, you have a lot less closing costs, and you take all your money.
Okay. So you get a lump sum, and the closing costs are less.
And there's different kinds. There's different amounts.
Right. Now, is there what's on a jumbo reverse? What's usually the maximum loan amount that you can go up to?
$6 million.
Oh wow.
Yeah.
Wow, that's huge.
Yes.
That's huge. Okay.
Yeah.
And is that for purchase and for refi, or does for both?
Yeah.
Okay. Let me ask you this, because I know we've been talking a lot about the refi side of this. Now, I want to kind of shift gears here about, are you doing any purchase?
Yes.
Reverse. Okay. What? Because I'm thinking purchase, I'm thinking reverse. It doesn't make sense. But can you kind of explain?
Yeah.
If you can explain to everybody how.
Explain, Lucy.
Explain, Lucy. How a reverse mortgage purchase? How does that work? So.
Well, you can buy this $250,000 house and bring $135,000 to closing.
Okay.
And then the rest is reverse mortgage.
Okay.
It's based. Yeah, I know it's a little weird. It's a weird concept.
Yeah.
But if you already had the house and you wanted to take a reverse mortgage, you would get that certain amount. Whereas you have the house already, or you're purchasing the house and it's just done ahead of time. The reverse mortgage is done ahead of time.
Right.
So you just pay
So let's say that example, I have a client that they're downsizing.
Yeah.
And
I have that exact situation now. It is $250,000.
Okay.
He is downsizing. He likes to cruise, so he's moving to Florida to be close to the
cool.
cruise line.
Yeah.
Yes.
Yeah. Where is he moving to? Is it
near
there's
Miami.
Mother Miami? Okay. Yeah.
It's a weird name for this little town.
Port Canaveral?
Close.
Is it Port Canaveral? Okay. Yeah. That's where I always cruise at whenever I go.
Yeah.
Okay.
So I just did this for him, and it's he had to come to the table with $135,000, and the rest is, in the reverse mortgage.
All right. So go ahead.
He sold his home, and it can all be done in one closing.
Oh,
he
wow.
sells his house.
Wow. Okay,
the
that's
money
good.
he gets from that, he leaves in the title company.
Okay.
And then
they roll it over there. Okay. Wow, that's cool.
It saves him.
Yeah.
Instead of having two closings.
Yeah.
Yeah. It's brilliant.
So I just want to talk about that for a second. So because I see this as a huge opportunity for realtors.
Oh, yeah.
Right?
Yeah.
And so let's say that the strategy behind this, if you're out there listening, everybody, if you are 62 or over and you're considering to downsize or purchase a home, think about a reverse mortgage, because in this example, he has no house payments, right, for the rest of his life. That's the kicker, right?
Yeah.
So he lives in the house, and he gets to go cruising, and he doesn't have to worry about a mortgage payment.
No mortgage payment, lots of cruises.
Right. But now, if he ever there's no penalty on this loan, right?
No.
So he can sell the house anytime.
Yes.
He's not locked into anything.
No.
So if he says, hey, you know what, a year later I want to sell the house.
Sure.
Okay, he can.
Yeah.
Okay, so
and you have the option of paying back into your line of credit. This is what I look at. If you have a house and you have a $100,000 mortgage, and so you've got another 10, 15 years, and in the end, what are you going to have? You're going to have a house that's paid for.
Right.
10 or 15 years.
Right.
If you do a reverse mortgage, you can pay into your line of credit, pay off that $100,000 if you want. You don't have to.
Right.
If you wanted to, what are you going to have when you're done?
Right.
You're going to have a house that's paid off, and you're going to have $100,000 and some in your line of credit that you can access over and over.
Yeah.
Pay back
so it's
if
like
you want or not.
Right. So basically, it's a piggy bank.
It's a piggy bank with a growth rate.
With a growth rate.
Yes.
So that's a wonderful. I mean, that's a no-brainer.
It is a no-brainer.
I mean, if you think about it, if you stop and think about it, if I'm 62 or whatever, I'm over 62 years old, and I have the access to this cash, versus on a regular mortgage, I wouldn't, right?
No. Your home is a huge non-performing asset.
Mm-hmm.
That's what it is. So access it, use it, live. I mean, make your life happy.
Yeah. No, I agree. I'm just thinking about
life is short.
No, I agree with you. I agree. I mean, it's and you don't know. The other thing is, like we mentioned earlier, is so if you're buying a house and you do a conventional mortgage, you're tied into that obligation.
Yes.
You don't know if you get sick or something happens, and you don't know what's going to happen in the future.
I guarantee you, stuff happens.
Oh, it does happen. It does happen. But the mortgager is not going to say, "Oh, it's okay. Don't worry about paying me this month because you got cancer, you got ill, you lost your job, right? You're going to have to make that obligation."
Exactly.
And so that's the thing, guys. That the thing that one of the takeaways I'm getting here about a reverse mortgage, it gives you options.
Lots of options, and you are in the driver's seat.
Right.
There's nobody telling you.
Right.
You can make $100 a month payment, or you can make a $5,000 payment twice a year. I mean, do whatever you want, or no payments at all.
Now, let me ask you this. Now, you talked about after the assuming passing of the property owners that if the home could go to the heirs.
Yes.
Okay. Now, is there any recourse to anybody, like the heirs or to the borrower? Is there any recourse?
Recourse such
as?
Like
is any legal recourse, like could they ever come back after the heirs for the principal balance? Or
No.
Okay.
That's, there's always a big question is, why is there such a huge upfront mortgage insurance premium, that MIP?
Yep.
Well, that is guaranteeing that your heirs never held responsible for this debt. The house is responsible for its own debt. If they cannot sell that house for more than $12.42, well then,
so
the heirs can walk away. If the heir or whoever,
right,
they can sell it for whatever they can, pay back the mortgage, and take the rest.
Okay, so let's say that the heirs did receive the property, and it was upside down.
Yeah. Well, then everything in the house, heirlooms, furniture, the cars, everything, it's all guaranteed by or insured by FHA.
Okay.
It's all the heirs.
Okay, so FHA doesn't come and take the old the clock and the 200-year-old gun and all that. Yes. So that goes to the heirs.
Yes. It's just the house that's responsible for itself.
Okay. So and then they would say, here, you know what, we don't want it, it's upside down. But let's say the opposite, that the house has a lot of equity.
Yeah.
So what happens then?
They get all the equity. That's one more thing I wanted to mention. If there's a husband and wife, she's under 62, she's still on title. Okay. He passes away, and there's $100,000 in the line of credit. Poof, it's gone.
Oh, wow.
It goes back into the actual equity of the house. Okay. That money is just in his name.
Right.
He's the only one who can access it.
Right.
And there's safeguards against that. But
Yeah, yeah.
You have to think creatively.
Yeah, think creatively. Or I guess could she? Let's say she's over 62 now. Could she apply?
Then it's a complete full refinance.
Yes. Yes.
And subject to all the closing
Okay.
costs over again.
Oh, is there any benefit to the upfront MIP at that time, or you have to do it again?
Yes, you have to do it again. But if it's in the last 2, 3, 4 years or whatever, you've paid some.
Oh, right.
So it gets.
Okay, gotcha. Okay. And then as far as the different types of options when it comes to reverse mortgage, there's the HECM, the LIBOR adjustable.
There's a few different programs.
Ones. That's the most popular.
It's the annual.
Okay, the annual is the most popular. Okay.
It is, definitely.
So what does that mean, annual? What does that mean, annual?
The rates
LIBOR?
change once a year.
Once a year.
And it's a lot. There's a monthly. I've never sold a monthly.
Okay.
I would never suggest it.
Right.
It's there. You're welcome. I give you many options to choose from.
Right.
But if you're my brother, I would never suggest that one because it's a lot more volatile. It changes every month. The cap is much higher.
Yeah.
Whereas the annual is,
a
lot more even keeled, and it changes once a year. But like I said, it stays pretty even.
Yeah.
The cap is much lower.
And it's based on the LIBOR.
The LIBOR.
Okay.
The London offered. The London. Oh heavens! London interchange.
Bank offer rate. Yeah.
I had to think about that.
Yeah, I know it's a mouthful. Yeah.
London.
Yeah. So basically,
now that's going to change too in a few years.
Okay. What do you don't know what it's going to change to?
No, but it's definitely not going to be the LIBOR.
Okay. So that's how and that's just an interest rate market, guys. And that's a huge deal. That's basically where they go around and pull all the banks and find out what the going rate is, and they determine.
It's the rate that banks borrow money from each other. Right.
The bank-to-bank rate. So, and it's a very stable market. So, now that is the most popular, and that's the one that allows the credit line growth rate, not the fixed rate lump sum, right?
Fixed rate, no. Okay. And that does not have a line of credit. Whereas when you take a reverse mortgage, a regular annual or monthly, whatever, you have 60%. Okay. At closing. And when I say at closing, that's about a week after closing, because even though you've gone through the entire process, you have a 3-day right of rescission after you've signed your final closing papers. You can back out at any time. And a lot of lenders don't let you know that. Yeah. They sign their application. They think they're trapped forever. You're not. So you pass your 3-day right of rescission. The next day they order the money. The next day it's in your bank. At the end of the first year, you get the additional 40%.
Well, that's an important. I want to make sure everyone understands that. So, let's say that your available limit, let's just say after the closing cost is $100,000. You're not going to get all that $100,000 the first year.
You're going to get $60,000 minus the closing costs. Now, if you have a lien or a mortgage, and it's $20,000 we're paying off, it's the mortgage and the closing costs. And whatever's left, you get at closing. If you want it, you don't have to take it. And that's another thing I'll get to you in a second. Then 1 year later, you get the additional $40,000 basically.
So do you have to put in a request for that additional $40,000 in a year, or does it just come to you automatically?
Nope, you request it.
Okay, you have to request it.
If you want the whole amount.
Right. Okay.
That's what I was going to get to. You can take your money out so many different ways. And combine. If you want to take it out in lump sums, you can do that. You can take it out in monthly tenure payments.
Like
it's a hard word for
tenure. Yeah.
Not 10 years. Tenure. So we will take your the amount of money you're going to get, divide it over your life expectancy, and you can have that on a monthly basis. Now, if one for the rest of your life, and we cut you off at 145 years old. Truly. If one spouse passes, the other one continues to get that exact same amount. So that's really nice.
Yeah.
Or you can say you want it in term payments. You can say, give me $1,000 a month until it runs out. I wouldn't suggest that.
Yeah.
Or you can combine it. You can say, give me $10,000 at closing and leave the rest in the line of credit, or give me the rest in tenure. And you can change that program. The company I'm most familiar with, it's a $20 charge to change your program, but you can change it every other week if you want.
Wow. So basically, what you're talking about, you can also choose another option is almost like an annuity type
Yeah.
income coming into you.
Or you can leave it in that line of credit and just let it grow. If you want to go take a cruise, or if you want to go, I keep sticking to cruises.
You like
Sorry.
cruises, don't you?
I'm the cruise queen.
Oh, me too. I love cruises. Yeah, I love them.
But I mean, if you need money, you access it.
Yeah.
They give it to you, no questions asked. They just put it in your account. And you can just let the rest grow.
Yeah.
You want to pay that back, go for it. If you don't.
Let me ask this: can you think of any reasons why someone? I mean, is there any reason why someone should not do a reverse mortgage that you can think of?
Personally, no.
Okay.
Because I mean, it's not for everybody, but I would think that if you don't have a lot of money saved up for your retirement, that is a way to save for your retirement.
Right.
Go ahead and get it.
Right.
If you want, pay down your closing costs. Leave it open. Let that money grow. When it comes to a point where you need it, it's going to be a lot more than what you put in it initially.
Oh yeah, yeah.
So, yeah. You're going to have options. The older you get, the harder it is to borrow money, to get a home equity line of credit, to get anything.
Right.
So if you have that, you don't have to apply anymore. You pick up the phone, $5,000, please.
Yeah.
And you're good.
Is it really that easy?
Pretty much, yeah.
Well, I love that. It's called pick up the phone and give me $5,000. So yeah, that's awesome. I mean, I'm a huge advocate, and I've helped so many seniors that also get out of debt.
Oh,
they have tremendous, significant debt, and they use that equity. I've helped them, like you said, go on vacation, invest in real estate. So there's again, there's so many options that you can do with a reverse mortgage that you don't have with a regular loan program, and you may not even be aware of it out there. So you have to remember, guys, that it's a government sponsored program. This is not like a private hard money loan. It's backed by the federal government, so they're not going to do anything shady and try and take your property, so
again, we are so regulated. We have to fill out forms and triplicate to sneeze. Yeah. At this point, we really are. It's one of the safest products out there. Yeah. It's safer than a lot of forward mortgages.
No, I agree. I agree with you.
Well,
now,
it is.
Isn't it also true that even before application that you have to actually do a counseling session?
Yes, we can't even take the application until your counseling's done and we've received your certificate. Okay. And that is a cost. It ranges. There is money out there where you can have it. They can just do it for free. You have to do some dialing. But it's on average, I would say, about $125. Okay. And that in most instances can be rolled into the mortgage as well.
Okay, good.
Again, out-of-pocket costs would be $500 on average towards the appraisal. Okay. If you have income issues, you just can't swing it. Mortgage lenders can work with you.
Right, to get that covered.
Yes.
Right. Now, what happens in the counseling session? What do they talk about? What's that about?
They make sure that we have done our job and make sure you understand you are responsible for paying your taxes, your insurance, and the general upkeep of the home. Those are three major things that you should do regardless of a mortgage, forward or reverse. They make sure they understand the product from A to Z and that nothing has gone by the wayside. Just, basically it covers our butt. Right. It covers yours as well. Right. If I haven't done my job, they're going to make sure. Yeah.
And then they actually get a certificate showing that they completed the session.
Yeah. Okay. Now that's, some of the negative connotations to a reverse mortgage. Oh, all this and that, and you hide things. No, if I've hidden them when they do the counseling, it's going to come up. Right. So it is. There's nothing hidden in a reverse mortgage. I totally believe in it. I think it's one of the most wonderful things ever.
Yeah. I can tell. I mean, just understanding how. I think what it is that, and how it is in life. People will fear something that they don't understand.
Yes.
And
I think the thing people fear mostly is salespeople.
Yeah.
And a lot of times I'll just say, I tell you what, I promise Not going to sell you a reverse mortgage. Not going to sell you nothing. But I want you to understand.
Right, understand. Yeah.
And then hang up on me.
Right, yeah, and then hang up
And
on
they
you.
don't.
Yeah, yeah. Well, yeah, I mean, you're presenting, I think, the facts to them.
Yes.
You know, you're showing them what the facts are about the loan program.
Yes.
And it's not, there's nothing undermined about it. I mean, if you just look at how the underpinnings of what a reverse mortgage is, it's truly there to help. And so I really believe, I'm a huge advocate. So guys, if you're out there, you know, we'd love to help you. That's what we specialize in, is reverse mortgages, and love to help you in any way that we can. Whether you're trying to buy a home, or whether you're trying to refinance, you should consider a reverse mortgage and compare it to other options. And we'd love to help you out with that any way we can. I mean, I'm so glad that you came in the studio today, you know, to meet with us. And you really educated me on a lot of things that I did not know about a reverse mortgage. So thank you so much for coming. It was very nice to meet you. I'm honored and delighted. Guys, thank you guys for checking out Real Estate Insider. We produce this show 3 times a week. Follow us. If you have any comments, leave them down in the chat box below. You can follow us on our Facebook, our YouTube, our Instagram. We work very hard, endlessly in our network to educate and empower people with real estate and finance. We're trying to grow our following to 1 million followers on YouTube. So please share this with your friends or family. If you're a realtor and you have any clients that are looking to consider a reverse mortgage, give us a call. If you're someone that's out there, you have an aunt or an uncle that is considering to do a reverse mortgage, reach out to us. We'd love to help you and educate you on the options that are available with a line of credit or a reverse mortgage option. So give us a call, 832-431-6331. This is Angelo Christian with another great edition of Real Estate Insider. Take care and peace out. Bye-bye.